financial problems, elder law, tax problems, business matters, divorce, personal injury, bankruptcy, your life, your reality. Life is complicated. There is the law and there is reality. Welcome to Law and Reality, sponsored by Thav Gross. Now here's your host, Ken Gross.
All right, welcome to this segment of Law and Reality. I've got with me in the studio Jenny Lingo, our tax expert at Thav Gross, Brian Small, David Einstandig. Our last segment, we were talking about crossing 60 estate and planning issues you need to know. This segment, we're going to shift gears. We're going to talk about tax problems, and the subject, the title is The Nitty-Gritty Truth when it comes to solving tax problems. And I want to do a good summary of coming through what the problems are, what are the basic solutions to them, how you should go about gaining that solution. So to start it off right off the bat, I want to throw out, in summary, the problems that we see on a regular recurring basis. Unfiled tax returns, audit, payroll tax problems where you haven't paid in, you run a business and you haven't made your payroll tax deposits on the wages that you have paid to your employees. And the fourth one is a very common one. People have not paid their federal income and state income taxes. Would you guys agree that's the basic genesis of the problems that people face when it comes to tax problems?
I would say those would be the most common problems that we see.
Okay, now let's start.
Having a problem with this microphone.
That's a common problem that you have on this show, David.
I don't know.
Is there anything we can do to assist you, or are you going to...
I'll be all right.
Usually when this happens, you throw a temper tantrum at some point, and you usually start throwing things around.
I'll just lower my chair.
Yeah. Do you want me to hold the mic up for you?
No.
Okay.
Tax problems seem to be created from the theory that...
Well, I want to do the solutions.
I understand. I'm going to say where the problem comes from is ignoring the problem.
The ostrich syndrome.
The ostrich syndrome.
Does that mean I have to get the ostrich out for the slides?
It should be great. That would be great.
No, I think it's more the squeaky wheel, which is because what we find
now
is...
I need two pictures. What's the squeaky wheel? I don't
have
understand.
no idea.
It's squeaky wheel is whoever makes the most noise is going to get attention first.
You mean from the taxing authorities?
And the problem is with the tax issue, it's not going to manifest until months or sometimes years later, so it's the easiest to avoid, and you can then deal with what's in front of you with your other creditors.
I got it. So here is what it is. The ostrich is you bury your head in the sand to ignore the problem. While your head is stuck in the sand for a sustained period of time, there's a wheel that starts squeaking. Once the squeak and the volume of the squeak gets so loud, it penetrates below the surface of the ground. You hear it, and then you pop out of the ground as the ostrich, and you go, oh, my God.
Yes, then you're panicking.
I really thought you were going to go somewhere else with that. I'm glad you didn't.
Oh, my God. Oh, my God works.
I think we have to go back to the last show about dementia.
Now let's go to solutions. Unfiled returns. What's the bottom line solution to unfiled tax returns is what? It starts with an F.
Well, the solution is
File?
Forget about it.
File them.
File.
Forget about it.
Forget about it.
It's not always that simple. A lot of people that haven't filed their return, sometimes people come to me and they say, well, I filed some of them, but I don't know which ones I filed. So sometimes the first thing you need to do is figure out what returns you haven't filed.
And how do you find that out if we go to you?
If you go to me, what we do is we get account transcripts, and I go back and I see which returns you filed, which returns the IRS may have filed for you, and which ones have not been filed.
All right, now, what if I say to you, there's 5 years I haven't filed. I have some records. I don't have all the records. I can't do the returns, Jenny. I don't have the information. What do I do?
Well,
I don't have the information.
The first thing we do is we get the wage and income reports, and those show us what 1099.
Where do you get them from?
The IRS for each year.
Oh, so you're going to talk to them about me?
No, actually,
You're going to turn me in?
I can go online and I can pull them and I can see what income was reported
Does
to.
that trigger like an alert to the feds to go after me?
No, it does not. What that does is it
I
then
worry about
gives
these
us
things.
the information to give to you to say, here's what you need to do to prepare. Now, a lot of people say, now I don't have any records. What you really need to do at that point is a good faith estimate. Obviously, if you're a truck driver, you had gas.
So you're
let's
allowed
work
to
it out.
you're allowed to estimate.
You have to at that point.
I mean, the bottom line is this. You need to get the return filed. We estimate as best that we can. It may not be a problem because unless they audit the return is accepted as you file it. But the law says you must file the return, so you need to file the return. People get the head is in the sand. They don't have the records. They're afraid to deal with it. It's a enormous process if you've got 7-8 years to pull all the records together. Get it done. Estimate. If you don't have the records, we estimate. And you estimate with a sense of framework. If, like Jenny said, if you're a trucker, you had to incur gas expense, oil expense, maintenance expense.
If you have kids, where you live, what you did on a daily basis, even if you don't have a single piece of paper, you could estimate your income and expenses in good faith and fulfill your obligation to file.
Right, which then brings us to the next point is what happens if you get audited?
Yes. Okay, now, that's, I have to say that
You have
on
a lot to say.
periodic basis, as I'm getting the mail at the mailbox at my house, I always say to myself, gosh, I sure hope today isn't the day that there's one of those letters in the mailbox that says, "Dear Mr. and Mrs. Gross, you are being audited." And it can happen. It's a random situation.
It
but
happens to everybody. My parents
if
got
it does
audited
happen,
a few years ago.
What do you do?
I called my mom up after the audit. I go, "How much do they owe you?" And she goes, "What do you mean?" I go, "How much do they owe you?" Because my mother has every receipt for everything that she ever had.
And I just want you to know, if anyone with the government is listening, I am just like Brian's mom. Same way. So if you want to audit me, you're going to owe me money at the end of the day.
They did owe her money.
The first thing is there's
Not everybody's in that situation.
No, most people are not in that situation.
there's a couple different kind of audits. One is just a computer audit where they match, say something they match up, and we have this happen sometimes with people who filed married filing separate, and they'll say, "Oh, well, we're denying your mortgage interest deduction," because what happened is the computer matched it up and didn't look for that second Social Security number. So that would be a mail audit. Where
So that's
then
pretty easy to resolve.
Easy to resolve. And then there's the other type of audit where you get a card from the revenue agent that says you need to come in and we need to meet with you.
Then you need records, and you should. What about representation? Should you go in there on your own?
No, it's always best to have representation, whether it's the CPA that helped prepare the return or whether it's an attorney that you hire. And what you should also do before the audit is bring that return into the professional, because what we can do is really pinpoint the areas that we believe are going to be audited, find out from the get-go what it is you have and what it is you don't have.
Let me give you a little nitty-gritty as we're coming to the break. For sure you need to plan. For sure you need to sit down with your experts to make sure you're ready for this thing. Sometimes if you have things in that return that you're really worried about, you need to bring someone in other than your accountant who did the return, because you might have to blame the accountant in the process of the audit in order to protect yourself. The bottom line is you need to plan in that situation. The nitty-gritty is it's a serious situation and you need to handle it right.
Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're Thav Gross. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP. Carrying too much debt? Resolve your debt. Call Thav Gross.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call Thav Gross. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
A lifetime of hard work. If you don't have the right plan in place, you can lose your home, your savings, and more. And you didn't come this far to lose everything. Samasco Law wants you to know that laws are changing. Today, the average cost of nursing home care is $85,000 a year. With proper planning, we can help protect your life savings and get you the Medicaid and nursing home benefits you deserve.
How much can you afford to lose? Call Samasco Law today.
If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
Thav Gross specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
We're Thav Gross. Our firm will solve your problem.
All right, welcome back. At the break, we kind of got together, and there were some of my colleagues thought I was a little zealous in my closing comment about blaming the CPA. I'm just saying, and that's the last thing in the world that we don't throw our colleagues under the bus.
Well, Ken, usually what happens is sometimes the CPA attends in the beginning, and then what we do is we come back in and defend later, and then we make those CPAs look great again by vindicating that the returns were accurate.
But I'll go with you on the bottom line. And when we're representing a client, the client's interests are paramount, and doing what you have to do in order to make that situation work the best outcome, that's the course that we have to proceed. Go back as an analogy to the short sale. When we handle a short sale, we sometimes have to take an adverse position to the brokers who are our friends, because we have to get the brokers to push back against the buyer to come up with more money. We have to get everyone to push against the lender to agree to let our client off the hook. We have to sometimes be the bad guy. And if you're not willing to be the bad guy, you're not willing to do the job. And let me tell you something. We're willing to do the job, and if we got to be the bad guy, that's what you got to be.
I would call that more good cop, bad cop.
Yeah,
I can't
Jen,
say that
I
I've
get
ever had a
called
CPA bad at me at the end. They're
No.
usually still happy with the results.
And usually I'm the one who gets called in to be the bad guy.
Yes.
I think, yeah.
Yes, that's what we do.
We like to have Jenny be the good cop. I can be the bad cop. David can be a pretty bad cop, too, and so can Brian.
Bad cop is actually more fun.
Yeah, well, that's why
Except,
I take
no
the
offense
fun
to any
side.
police enforcement.
Right. Payroll. Police enforcement guys. That's where it all came up. Is in the interview. When you have the suspect in the room, you got the good cop.
Yeah,
and the
but
bad cop.
cops these days are getting a real bad rep these days. So
Yeah, well, let's not even get into it, because you could say deservedly so, you could say not deservedly so. So we won't say anything. It's just another one of our current societal problems that everyone else can deal with. Today we're dealing with tax problems, payroll tax problems. Client comes in, they have an ongoing business. They haven't made the payroll tax deposits in 3 quarters. They owe $80,000 on unpaid payroll taxes. What do we do?
Well, the first thing is we make sure that they've actually filed the 941s. And if they haven't, we get them ready and we send those in, because
But
filing
won't that
is
bring
paramount.
the problem right to it?
Unfortunately, yes, it's going to bring the problem right to you, but if you don't, you're going to get shut down without the opportunity to actually work something out. The next thing we do is we say we're not going to pay. A lot of people make the mistake where they take their funds and they pay it on the oldest tax deposit that was due from.
Well, wouldn't you pay the oldest first, and then
No.
that problem goes away?
In order to get some type of collection alternative with the IRS, you need to be current, which means I say take those first dollars and make sure you pay your current tax deposits. That's more important than paying the back. We can always work out a deal on the back. but
And
you need to
sometimes
be
we want to
current.
even hold that money to pay that first deposit once we have the collection officer assigned, so that we're showing some cooperation with
That's
that
true.
agent.
We do that, and a lot of
Strategy is what that is.
And there's
it'll-
also another big part of that process at that time when the client comes in and they haven't paid for 3 quarters. We also have to find out why, what's going on with the business, what efficiencies can we do so we can put the client in a position where they're operating in the black and then be able to sustain the appropriate payments. If we can get that and nip that in the bud at that time, then we can strategize and develop a plan to deal with the rest. But if you don't
It's a
look at
very
that,
good- it's a very
if you
good
don't look
point.
at that, you're in trouble.
If you're financing the losses of your business by not paying your payroll taxes, you have to change the business model. Your business has to operate at a profitable level, at least enough to pay its expenses, including the payroll taxes. Otherwise, there's no point in going forward. It won't last.
And there's 2 things to do. There's 2 things to do. You either increase your revenues, and or you decrease your expenses, and that's the end of the story. But there's methodologies
well,
to
sometimes
get there.
you,
Sometimes
sometimes you
they're
might
so
have
con-
to just also just shut down and go through a bankruptcy on the company so that you can start back up and go through and have a new company.
True. Well,
if it's the appropriate plan, for
staying
sure.
optimistic. A lot of times when clients come in, they're so confused and under such pressure because of robbing Peter to pay Paul that they've lost sight of cost reductions that they can implement, and sometimes price increases that they can also implement in the sale of their product. They're not thinking straight at that point. You need help at that point.
Well, and sometimes there's just events that have occurred that have caused them to have a bad year. Or what's happened is they got behind and then they got into that mentality, well, I'm just going to keep not paying it and paying other things.
Employee embezzlement or theft or strategies, something like that we see all the time.
What about trust fund liability? What is that? I hear the term.
That's the
I know the
portion.
term.
Yes, you know the term. That's the portion that you can be assessed personally as a corporate officer, manager, or even employee of a business.
Can be or will be if you don't pay the taxes.
Well, if you somebody is going to be if you don't pay the taxes, and what they're going to look at is who was responsible for taking that money from the employee and paying it over. That's the portion that the employee withheld, the Social Security and Medicare, and their federal
so you don't get
withholding.
assessed for the employer's matching shares. Is that what you mean?
Right, but personally, they will hold you liable for the portion that the employee held because they say the employee gave that to you in trust. That was never your money. That was your employee's.
So suppose I'm the bookkeeper of the company, okay, and I pay the bills and I write the checks and I have a stamp to stamp my boss's name, or I can sign my name. Can I be held liable
Yes.
for that? I don't own the company.
Yes.
If I don't pay the people, he's going to fire me.
Right, you can be held liable, and what they do is they bring you in for it's a 4180 interview, and it's a form you fill out. And I always say, see a professional.
Should I just go myself? Because I don't own the company. How much trouble could I get in?
No, you see a professional first because the problem is how you answer the questions. A lot of times they'll say, well, can you sign checks? And the
Yes.
bookkeeper will say yes. Well, that's not really the answer. Can you sign, for example, let's say our bookkeeper at the office, can she sign checks without Ken Gross's permission?
No, she can't even sign checks.
Okay. Well, but that's the question.
And that's just as much to protect her as it is to protect the company
Right,
from an
and
internal
that's
control
why we have to
standpoint.
explain in that interview that bookkeeper signs checks at the direction of someone, that they're not just the ones
they're not
making
making
the
the
decisions.
decisions.
There's
Brian,
another
I know
important-
you wanted to say
There's
something
another
too.
important point, though. We keep using it in the singular, but quite often it's the owners that will get assessed. It's a manager, and it could be other employees like a bookkeeper. It's not just one
What
person.
do we do for the owner is my question.
Well, what ends up happening is someone is going to be assessed, and if you're assessed personally, there's a few things we can do. If your business can't afford to make installment payments that are eventually going to pay the liability in full, we can ask that they defer collecting against that officer as long as the business is making those payments. Other times, the officers are not collectible, or we set the officers up on a payment plan. Or we can look at offering compromises. But
All right, yeah, in fact, let me kind of summarize one of the strategies that we do that's a little bit on the complicated side, but I'll do it as we're coming into the break. Sometimes the liability is too great for the company to make it a go. So what we have to do is we have to come up with a strategy to close the company down, start a new company, not with the same owner, but with the relatives of the owner so that they can get back in business. And then on the owner's side, we try and structure it so we can do an offer and compromise to get him out of the trust fund liability at the end of the day. It's complicated, but there is a way out.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
Worth Ave Gross, our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call Thav Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call Thav Gross today, 888-235-HELP.
A lifetime of hard work. If you're approaching retirement and don't have the right plan in place, you can lose your home, your investments, and your savings. And you didn't come this far to lose everything. Putting a solid strategy in place with Samasco Law legally protects your assets as well as your wishes. Since a will doesn't cover you medically or financially, Samasco Law goes beyond ordinary asset management protection to safeguard everything you have.
How much can you afford to lose? Call Samasco Law today.
If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
Thav Gross specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
Worth Ave Gross, our firm will solve your problem.
A lifetime of hard work. If you don't have the right plan in place, you can lose your home, your savings, and more. and you didn't come this far to lose everything. Samasco Law wants you to know that laws are changing. Today, the average cost of nursing home care is $85,000 a year. With proper planning, we can help protect your life savings and get you the Medicaid and nursing home benefits you deserve.
How much can you afford to lose? Call Samasco Law today.
It's devastating, the effects of debt and foreclosure on you and your family. There is a solution.
Worth Ave Gross, our firm will solve your problem. Some fear the word bankruptcy, but in reality, it's a strategy to save your home and to eliminate debt. If you're in financial trouble, timing is critical. You need to take action now. We've been saving homes and eliminating debt for over 33 years.
Call Fav Gross 888-235-HELP.
All right, let's do announcements first. Our office in Flint is up and running. People want assistance with regard to tax, business, any type of these issues, estate planning. You should contact us at 888-235-HELP. Let your Flint friends know. TV version of Law and Reality, 11 o'clock a.m. every Sunday. Tune in. You get to not only listen to us, but you can see us and see the slides at the same time. We have a seminar coming up.
Is that good or bad?
Good and bad. Good when it comes to Jenny, bad when it comes to you and Brian.
Neutral when it
Great
comes
when
to
it
you.
comes to me. Okay.
Yeah.
Wednesday, August 19th. End Debt this summer. This summer is the seminar. It's from 7 to 8:30, focusing on how to preserve future income for you and your family. Free tickets, go to thavgross.com or lawandreality.com. Get a free copy of my book, Dump Your Debt. We do Q&A at the end of the seminars. Go to the Law and Reality website. You'll see testimonials about how people enjoy the seminar. It's an hour and a half. We do Q&A after. We actually have a lot of fun. People find it to be kind of an uplifting seminar. It's a different approach to solving problems. It's not what you're going to get and see if you go on the internet and browse and say, how do I solve my problems? It's much more innovative than that. And it's fun, actually, believe it or not. Free reports on the website. Go to the website, lawandreality.com. You can download free reports. I want to thank our sponsors, Thav Gross and Samasco Law. Now I want to get back into the nitty-gritty on tax problems. Next one, income taxes and payroll taxes are unpaid. What are our avenues of resolution to get the taxes paid?
Well,
What I hear on TV all the time is, let's do an offer and compromise. Let's pay $4 and get rid of the $4 million liability.
well, there's the offer and compromise where you pay less than you owe. However, that is a math computation, so we have to see whether you qualify or not, and not only whether you qualify, whether you can afford to make that payment. I have a lot of clients who they'll come in and they'll owe $100,000, and I'll say, great, you qualify for an offer and compromise of $20,000, but you have to come up with the cash.
How long do you have to come up with it?
There's two different types of offers. There's a lump sum offer, which says you have to come up with it within 5 months of the date of acceptance. And then there's a periodic payment offer where it gives you 24 months, but that offer is a lot of times double.
5
what the
months
lump
from the
sum.
date of acceptance. Let's tell our listeners, how long does it usually take to get an offer accepted?
If we're dealing with an individual that is not self-employed, I would say it usually takes 10 months.
All right, so you got
we
15 months to raise the
we've
money.
got 10 months to start raising the money, 15 months to have completed the money. Does the money have to be paid over that 5 months in equal installments?
No, typically I just set it up that the full amount will be paid at the end of the 5 months.
So you have a 15-month planning window to raise the capital. You really want to take advantage of that window. You don't want to pay double and go for the 24
Right,
months.
but you know what? For some people, it just does not work. So then what we look at is the installment agreements. And there's a couple different types of installment agreements. There's the installment agreement based on ability to pay, which is really the IRS's determination of your ability to pay, where you look at your current income and allowable expenses. Then, if you owe less than $50,000 and the taxes are not too old, meaning that they can be paid in back in full over 72 months in equal payments, then they can set you up on an automatic 72-month payment
And how
plan.
does what's a non-automatic? Where does that apply? If you don't fit within those parameters?
If you owe more than $50,000, or if you owe under $50,000, but you have to do an income-based
so in that
installment
case,
agreement.
you look at what your income is and your allowable expenses under these so-called national standards, right?
Right, and then you determine it.
So let's say, so our listeners understand, let's say I don't qualify for an offer and compromise because I've dissipated assets in the past few years. But I could qualify for a $300 a month payment plan, and I happen to owe $500,000 to the IRS. $300 a month never pays $500,000.
Right. The IRS has 10 months from the date that the tax was assessed, but there's certain things
10
that
years.
will. Yes, 10 years, I'm sorry, from the date the tax was assessed to collect those taxes. But there's certain things that will extend the statute. But at the end of that 10 years, they may write it off. So if you only pay $300 a month and it never pays it in full, you did somewhat get an offer in compromise. The problem is that they can reevaluate that payment plan if your income changes.
But it's a good strategy to approach, Brian. Brian, we're running short of time. I want you in 30 seconds because I want to cover one other topic on this also. You can also discharge income taxes.
Income taxes
in
are
bankruptcy.
dischargeable in bankruptcy in the event that the tax came due more than 3 years ago, the tax return was filed for at least 2 years, and you haven't been assessed in the last 240 days.
A lot of people don't realize that, and a lot of bankruptcy attorneys don't realize that, but that's a key planning strategy in dealing with the tax problem because sometimes that's the optimal way. Sometimes we adopt strategies to get to those parameters. Get
Like
the 3
putting
years out
clients
there.
into an installment payment agreement for a year and a
And-
half till
and
the
then-
3 years is up.
And then put it, and then
But
file
it
the
also
bankruptcy.
relates, Ken, back to what we said at the beginning of the show is file your returns.
Absolutely file the returns. Now, you walked into my office yesterday and you said, or Thursday, and you said to me, a client just called up. They owe $30,000 in taxes, and an offer in compromise, they'd have to pay $20,000 in order to make the offer work, or they have to pay $30,000. They'd have to pay
It was
the full
actually
amount.
more. It was like
And-
double the amount.
And this company wanted to charge them $6,800 to submit an offer in compromise. Why does that happen?
It happens because a lot of people are
And should
calling.
they do that?
Absolutely not. The problem is a lot of people are calling the 1-800 numbers and they're dealing with people out of state in cubicles, or they're going to people who are not CPAs or attorneys, and they're quoting exorbitant fees to do things they can't do.
Yeah, I want to narrow it down because we only have a minute left. What happens when you call those numbers, and I'm just going to be blunt, you're talking to a salesperson. You're not talking to a CPA. You're not talking to an attorney that deals with tax problems. You're talking with somebody who's sitting in a carrel answering phones constantly, and he makes a big buck, or she makes a big buck out of getting your credit card number then and there, and they're going to tell you whatever you want to hear because what they want is your money. And if you're going to invest your life and your future in that, you need to wake up. You need to hire an attorney locally that sits across the table from you, that looks out for you, and then God forbid if it's not done right, you have a remedy. Never invest your future in a telephone where the person on the other side of it, you don't even know what state they're in. You got to think about your future. It's your life. It's your money. That's law, and that is reality.